Hi there. Today we are going to tell you about 2026 luxury car tax trap that every UK electric vehicle owner must know.
Thinking about buying a new electric car here in the UK? Then you absolutely need to know about a hidden tax trap that could sting you for over £2,000. We're talking about the 2026 luxury car tax trap, and in this session, we're going to walk you through the essential analysis from the experts at ProTax Accountant so you can avoid it. Okay, let's get right into it. Let's start with this number right here, £2,125. This isn't some small change. It's the potential extra tax you could be hit with over 5 years if you're not careful when you choose your new EV. It's a hidden cost, a financial trap that, honestly, many people just won't see coming. So where on earth does this figure come from? Well, it all starts with a huge shift in government policy. For years, one of the biggest draws for going electric was simple: zero road tax. But as of April 1st, 2025, that's all over. The government decided to level the playing field, meaning all new cars, whether they're electric or petrol, are now in the same tax system. The goal was fairness, but what it's actually done is create some pretty expensive new headaches for EV buyers. So let's break down exactly what has changed. This first part is pretty straightforward, but you need to understand it because it's the foundation for where the real trap is hiding. We're talking about the standard Vehicle Excise Duty, or VED, that now applies to every single new electric car. Okay, so for any new EV registered from April 2025, you're now paying a small £10 tax for the very first year. From the second year onwards, that jumps up to the standard rate of £195, which is set to climb to £200 from April 2026. This also affects EVs registered after April 2017. Now, that's the basic cost, but hang on, this isn't the figure that's going to catch you out, not even close. All right, now we get to the real heart of it, the so-called expensive car supplement. And here is where it gets complicated. And this is the bit where most people get tripped up, because the name itself is incredibly misleading. The official name is the expensive car supplement. It's an extra chunk of tax that gets slapped on top of the standard road tax for cars with a list price over a certain amount. Now you hear luxury car tax and you're thinking Ferraris, Lamborghinis, right? Well, think again. That's the trap. This tax isn't just for the super rich anymore. It's now hitting normal family cars, brands like Kia, Volkswagen, and even some Teslas. And the cost? It's a big one. An extra £425 every single year. This isn't a one-off payment. It's a nasty surprise that keeps coming back year after year. And it's a long-term thing too. You have to pay this supplement for 5 consecutive years. It kicks in from the second year you own the car and carries on all the way through to the 6th. Over those 5 years, that $425 a year adds up to that shocking number we started with, $2,125. So let's put it all together. You've got your standard annual road tax of £195. Then you bolt on the £425 supplement and bam, suddenly your total annual bill is £620. That's a massive leap from the zero tax EV drivers got used to, and it's a cost a lot of people just aren't budgeting for. Okay, now we come to the trap itself. This is the bit you really need to pay attention to. Stay with me because understanding this next point could literally save you over £2,000. The rules for the supplement have changed, and the specific date your car is registered is now the most important factor of all. Here's the timeline, because this is everything. If your EV was registered before April 1st, 2025, you're golden. Totally safe, no supplement ever. But between April 2025 and March 2026, the supplement kicked in for any EV with a list price over just £40,000. The government realized this was a bit harsh, so they raised the threshold to £50,000 from April 2026. This timing is absolutely critical. Let's make this real. Imagine Sarah from Birmingham. She's ordering her new family EV after April 2026. The list price is £49,500, so she's just squeaking under that new $50,000 limit. Her total tax over 6 years is just over £1,000. But then she decides to add just one factory option, maybe a premium sound system or a different paint color that costs £1,000. Her list price is now £50,500. Just like that, she's triggered the supplement. Her total tax bill skyrockets to over £3,000. That one optional extra just cost her an extra £2,125 in tax. That is the trap. So you're probably thinking, how on earth do I avoid falling into this? Well, the good news is you can. It's entirely avoidable, but you have to be careful. The experts at ProTax Accountant have put together a really clear, actionable checklist to help you make the right choice. Okay, let's walk through this. Step 1. You must confirm the official manufacturer's list price. That is the only number HMRC cares about. Step 2, check that first registration date. Anything before April 1st, 2025 is your golden ticket. Step 3, and this is the big one, watch those factory-fitted options like a hawk. Step 4 is about strategy. Maybe going for a slightly lower trim level gets you the car you want without the 5-year tax penalty. And finally, step 5, don't forget the nearly new market. A car registered in March 2025 could save you a fortune. And here's a massive pro tip, straight from the tax experts. And trust me, this catches so many people out. The price you actually pay the dealer doesn't matter. The dealer could give you a £2,000 discount on a £51,000 car, but HMRC still sees the list price as £51,000, and you will pay the supplement. It is the official list price, and only the list price that counts. Now, just when you thought you had it all figured out, this isn't the end of the story. The tax landscape for electric vehicles is set to change all over again, with a new pay-per-mile system on the horizon. So, really briefly, from around April 2028, we're expecting a new system called EV'd. Basically, it's a self-reported tax based on how many miles you drive. For a typical driver, that could mean an extra £300 a year, on top of the standard road tax we've already been talking about. Look, it's clear the rules are getting more complicated, not less, and the financial stakes are really high. Making an uninformed decision when you're buying your next car could easily cost you thousands of pounds in taxes you just weren't expecting. It's more important than ever to be prepared. So, this is the question I want to leave you with. That perfect electric car you've had your eye on, have you checked its official list price? Have you really thought about those optional extras? Is your dream car sitting just a few pounds over that critical £50,000 threshold, ready to turn into a tax nightmare? Now, before we finish, we have to be very clear about this. This information is for general guidance and is based on the rules as they stand in early 2026. Tax laws can and do change, so please don't rely on this alone to make a major financial decision. To really take control and get advice that's tailored specifically for you, the best thing you can do is talk to the experts. The team at Pro Tax Accountant are ready to help. You can get in touch with them on WhatsApp, by phone, or by email. Thanks so much for joining us, and be sure to subscribe for more essential updates to help you stay ahead of the game.